The auto market continues to be on fire, too. Yesterday's CPI data showing used car prices increased by nearly 4% in December after going up by 2.5% in each of the 2 months before that. And for the full year, used car prices are up an unbelievable 37%. Plus, the average new car is now selling for more than $47,000. While it's been a good few years for auto retail stocks, they are still well off of their highs as a group. But joining us right now is Earl Hesterberg. He's the CEO and president of Group 1 Automotive. And Earl, when we talk about these higher prices, it's because of two factors, supply and demand. And maybe demand is the most important factor right now. What do you see in the showrooms just in terms of what consumers are willing to pay and how desperate they are to get their hands on an automobile?
Well, there's still extremely strong demand. We have a big forward order bank. And yet the price increase is basically a function of cars just aren't discounted anymore. They primarily sell at the manufacturer's suggested retail price. And the manufacturers have reduced their incentives by an average of $3,000 a unit. So it is supply and demand, and it has not really dampened consumer enthusiasm for buying autos.
It's the lack of discounts that are there, but there's also been something just in terms of market adjustment costs that dealers a lot of times will put on that are thousands of dollars. I mean, I know that your earnings have been very strong. I think they were up by better than 36% for the third quarter. And that was despite the fact that you didn't have as many new vehicles coming in. You were able to raise revenue by quite a bit more. Revenue was down just 0.3%, despite an 11.9% drop in the units that were sold. So there is the ability to ask consumers to pay more. Is this because they're getting higher premium cars? Is this just because you're able to raise prices? It's the discounts. It's all of these things kind of adding up.
Well, manufacturers are manufacturing the vehicles that turn the fastest, and that tends to be trucks and SUVs and bigger vehicles. And they're also optimizing their mix, right, to maximize their profit. So that tends to be more expensive vehicles and more popular vehicles. And the more popular vehicles mean they just turn when we receive them. They go right out the door. So the distribution network is operating as a lean distribution network for the first time in a long, long time.
Yeah, when is the last time you've seen things this lean when it comes to distribution network?
Well, I've been in this business 47 years. I would say this is the first time. I never thought I'd see this.
Shepard Smith here. Thanks for watching CNBC on YouTube.